Hello friends, what's up? There are many ways to analyze the stock market, right? What are the ways to analyze and interpret the stock market? Number one, fundamental analysis. Number two, technical analysis. And last but not the least, number three, sentimental analysis, right? You know how to deal with fundamental analysis like analyzing using the financial statements of that specific company. Number two, technical analysis, analyzing using the charts and past history of the company. Last, what are the methods or ideas we have to analyze the stock market using sentimental analysis? Come on, let's go and see what are those interesting steps to analyze the stock market sentimentally. Right? These are the five ways. There are many ways to analyze the stock market sentimentally, but these are the significant five ways through which we can do sentimental analysis for the stock market. What is the number one way? Option open interest. What is open interest? We know buying and selling happens in the market, right? Volume registers or records both buying as well as selling. But open interest will note or record only the outstanding buying or outstanding selling. What is outstanding buying and outstanding selling? When I am buying and I'm not squared off my position, if it is still open, that is considered as open interest because it's still outstanding. I didn't close my trade. Same goes to selling as well. So open interest is a pretty wide concept. It takes a separate session or video to analyze about open interest. But I'm going to give you a simple technique, simple trick through which we can leverage this open interest for our sentimental analysis. What is that? Most of the brokers are in many places. You come across call put and call option, call put ratio. Here, right in TD Ameritrade, I'm using TD Ameritrade. Here, when I see, say for instance, if I take Apple stock, see here you can see the put call ratio. What does it mean? It gives you the ratio of put. It gives the ratio of put open interest divided by call open interest. So it gives this number. So with this number, what shall we interpret? If the put is more and the call is less, this number will be more than 1. If it is more than 1, what's the understanding? There are more puts and lesser calls. If it is less than 0.5 or less than 0.25, what's the understanding? There are more calls, lesser puts. So now Apple is giving a number of 0.65. What does it mean? So the ideal ratio for put call ratio is 0.5. If it is less than 0.5, we consider it as bullish. If it is more than 0.5, we consider it as bearish. I repeat, the ideal put call ratio for any stocks is 0.5. If it is less than 0.5, it is bullish. If it is more than 0.5, it is bearish. So it is little bearish in case of Apple stock. Let me take another stock and see. KGC. This is a gold, Kinross gold card. Here, the put call ratio says 0.269. What does it mean? It is less than 0.5, so it is bullish. And even the extremes are considered as bullish or bearish. Like if the put call ratio is 1.5, meaning there are more put option than compared to call option. It's an extreme. In that case, we believe that the put whoever went in for put option, whoever think the market will be bearish, they'll come back. market is a swing, right? It goes up and down, right? So if even if the extremes are considered, if there are more puts, extreme number of puts, then we consider the market will reverse back and it will be considered as bullish. If there are extremely more call option, that is, if the ratio is 0.05 or 0.01, then we believe that market tend to take a reverse position and it will be bearish. So keep it in mind, zero point 0.5. If it is less than zero point 0.5, it's considered as bullish. More than zero point 0.5, it's considered as bearish. That is point number 1. What is point number 2? Short interest. In market, most of us or many people aware that they'll be buying and whenever market goes higher, we'll sell. But the other way around as well happens in the market. There are people who sell and buy it when the market goes down. Let me give an example for beginners. Say for instance, if I am a rice trader, I believe that at the time of Diwali, the rice price goes down. So what I do, if I have 100 bags of rice now, I'll sell it right now because right now the prices are pretty higher. And at the time of Diwali, when the prices goes low, I'll restock it. Do you think it's an ideal strategy to follow? Yes. That's what happens in the stock market as well. How to identify or figure short interest of a particular stock? Let's go to Google. I want to find the short interest of Tesla stock. So I type Tesla short. So here I get the short interest for Tesla stock. So every 15 days, brokers are obligated to share the short interest details to the exchange. So within 2 weeks or so, the exchange will publish to the general public. So right now we have the details till 31st August. So here the short interest, you can see by 30th of June, Tesla short interest was 69 million. Now it came down to 54 million. Right? This is another way of finding the sentiment of the market. How to find the sentiment of the market using short interest? If there are more sellers than buyers, we believe that market go down, which is bearish. If there are less sellers, then we believe the market will go higher, which is bullish. Right? There is a second option, short interest. Third option, you are all aware about VIX, right? VIX is the fear gauge, right? Fear indicator. So if VIX is going higher, then we believe there is more fear in the market. So there will be more volatility. There will be more put buying. If there are more put buying, what's the understanding? Why people go for put? When they consider the market will go bearish, then they go for put. Right? So if the VIX is higher, the market goes down, and the VIX is lower, the market goes higher. Right? Lesser volatility, market goes higher. Right? What is VIX? VIX is actually volatility indicator for S&P 500 index. So every stock has their own volatility. S&P 500's overall volatility is measured using VIX. Right? This is the third option. What is the fourth option? We can check out the insider trading. How can we check the insider trading? Again, go to Google. Type Tesla insider. I took an example of Tesla, you can see, you can pick your own company as well. Insider activity. Basically, with regard to insider trading, selling is pretty common. Okay? People sell for whatever the reason they have. They have people have lots of needs, lots of wants. They'll sell for whatever the reason they have. But significant importance is given only for buying. When people buy, when the insider buy, it's a pretty big bullish activity. Right? So, for instance, if for Apple stock, if the CEO buys, then we believe there is a huge potential for Apple to go higher. But the selling happens normally because whatever the reason they have, they'll sell it. Why I'm highlighting what I'm trying to convey here is buying by the insider is given little more weightage than selling. Last but not the least, we have American Association of Individual Investor. They measure to a survey. So how can we check it out? So use this link. So this association will measure the market sentiment using a survey. So this is the survey result for week ending 9th September. So here people are less bullish and 27% neutral, 48% bearish. Okay, this is also another way to measure the sentiment of the market. Right? So these are the 5 ways. These are not the only 5 ways. There are many more ways to measure the sentiment, but these are the significant 5 options to measure the market sentiment. Hope you get my point. Thank you for watching this video. I forgot to tell you one thing. Please consider subscribing to my channel and share it with your friends if you see value here. Thank you, friends. Bye bye.